This is Adam Hewison. I'm coming to you from Market Club's Digital Studios, and we're looking at the sterling USD cross rate today. And as you know, if it is GBP, that's for the pound, and USD for the dollar. Now, the way it's quoted here, it means when prices are going lower, it's not good for the British pound. When prices are going higher, it's not good for the USD. So you're always long the front month, in this case the front symbol, which is the British pound. So let's take this off the screen and let's take another look. As you can see, we're starting this from February. We'll go back further, but you can see the market really has been kind of choppy and moving around, but it has made some. This is a very important level, by the way, right here, and we have looked at this type of situation before where we see a top like this, and this area here, this is what's called a pivot point. Now I'm going to put our triangles in here, our trade triangles, which you may have seen or may not have seen before, but they're very powerful in connecting all of these symbols together. So let's take this off, and I'm going to scope this down into a weekly chart, which is really important. And I'm going to get the data, and I'm going to put there we go. And as you can see, we had a signal today, April 1st, this is not April Fool's Day, for trading at 197.33. The market's currently trading at 197.77, so it's still a little higher than where we original sell signal. And as you can see, we're doing this on April 1st, and sterling is down 56 points for the day so far. Now it's important because our weekly signals basically give us our trend. Okay, so those of you who've seen these videos before, you'll understand this. So a weekly is our trend. Just example, here the trend was down, here the trend was up, and vice versa, these little squiggles here. But we use the daily, and that's what we're going to look at right now, and take everything off the screen. We're going to go to the daily, and we're going to scope this in and look at our daily. And as you can see on the daily, we actually got out of this position, or out of the market in this case, at much higher levels, at 198.88. Now we had a signal, as I said, today to go short sterling. So we want to sell the GBP and buy the USD. Okay, that's how we see this market going. So let's take this off the screen. Again, these trade triangles are very powerful and they work. Okay, so let's take this off the screen and let's scope this out a little further so we see more of this market. And I'm going to actually, I'll scope it all the way out and take all the signals off, and you can see how wonderful this market and how it trades. You can see we're going back to the start of 2000. You can see we had you can see the sterling's been actually doing pretty well against the pound. Excuse me, sterling has been doing pretty well against the dollar, I should say. But maybe we've seen enough. Maybe the 210 level, that's all she wrote. So there's important levels to look at here. One, you're going to have a very important trend line, which I'm going to just draw in by freehand, but you can see pretty much that's the overriding trend. So it's still saying that the sterling's very high, and if you draw a line here, you can see we've been in a kind of a broad channel. So the GBP has been in a broad upward channel against the dollar since the beginning of 2000. Now, whether that's going to change or not, we don't know, but certainly the signal would be, if we see today's signal and we see this market continue lower, which I think there's a good chance we will, I think the dollar will get stronger. So let's take this off the board. I'm going to scope this in just a little bit, and I want to look at, that's good right now. I'm going to go use our Fibonacci tool. I've used this before, and you've seen this, how we use this. This is an incredible tool that a lot of people in the market look at, especially professional traders. These are retracement levels. And you can see we had the first retracement, which is right around here. We had the bounce back up, and now we're looking at the 191 level, which is a 50% retracement right here, and the 186 level, which is a 62% retracement. So these are the levels we would look for. Now this little bounce we saw up here, we can actually Fibonacci that too. So I'll take everything off the screen again. we'll go back to our Fibonacci tool, which is right here. And as you can see, I'm going to scope this out a little further so you get a better, clearer picture of, so you can see the market retraced little pivot point we've talked about before. We had a retracement first to the 38%, then to the 50% level. And this is a 50%, these are retracements from this level here and this level right here. Okay, that's pretty much where you want to look at where the market. So the market came back into a zone right around here between the 50 and 62% level. This would have been a 62%, which it did not make, where it was going to find problems. So again, we've had this turnaround. I'm going to take this off the screen, scope this in a little bit further. So I'm going to put our trade triangles in here for today. And as you can see, today's signal is indicating that the sterling should go lower. The big signal here in sterling is going to be this level right here, right around the 194 level. If we see the market go below there, then you're going to have an awful lot of work over that area, right starting around here somewhere. So that's going to mean you're going to take this measurement from the 212 level down to about the 194. That's 18 points. Subtract 18 from 194. I think that gives you 176 on the downside for sterling. So hey, this is Adam Hewison with today's Market Club update on Forex, and in this case the cross between the sterling and the US dollar. Hey, thanks for watching. I'll see you on the web.